The Alpha Horizon. Thinking different, acting aware.
We're only a few days ahead of US election results. This is a potential game changer both for fiscal and foreign policy in the United States. My name is Alberto Gallo, portfolio manager at Algebris Investments. Today we're going to talk about what we expect and how we're positioning for the outcome.
What are you expecting on the eve of the US election?
Election outcomes over the past few years have meant big surprises for forecasters around the US, the UK, and Europe. Our approach is to combine art and science. We use models that take the data from public polls and transform these data into probabilities. But we also adjust sometimes the polls for potential errors. For example, voters that are shy about saying that they would vote for Brexit or for Trump. Given our framework, we've been able to understand and guess the high probability of Brexit and of a Trump victory in 2016 and of a Macron victory in 2017, for example. Today, we are forecasting a high probability of a Biden victory, but also of a blue wave, so where the Democrats would win both the lower house and the Senate. What the interesting thing is the market and investors have been very skeptical on Biden for over a month. And in particular, a lot of investors were afraid of a contested scenario. We don't have exact market implied probabilities, but from polls that have been across investors from several investment banks, we can say that the probability implied by these polls was around a 50% for Biden, 40% for Trump, and a 10% probability of a contested elections. These were the odds that investors were voting for a month ago. During this month, however, most investors were expecting a Trump comeback, a good performance for President Trump in the first and second debate, and this hasn't happened. As a result, the market today is a lot more balanced with our initial expectations. So I would say that investors today and the market prices reflect a higher probability of a Biden victory and a higher probability of a blue wave. However, not yet the probability that our data and our numbers imply.
What are the possible scenarios?
The most likely scenario for US elections, according to our model, is of a blue wave. This means the Democrats would win both the House and the Senate. This scenario would be a game changer for fiscal and foreign policy. The Democrats plan over a $2 trillion stimulus in January 2021. This stimulus would include large-scale spending for infrastructure and also measures to regulate and break the monopoly across the largest firms, for example, in the tech industry in the US. It would also include tax hikes, for example, an increase in the corporate tax rate to 28% and a 15% minimum tax on companies' book income, as well as an increase for the highest individual income tax rate. What this means is the government will tax more. It will raise around $3.5 trillion in additional taxes over the next decade, but it will also spend more in the real economy, particularly in new energy and infrastructure, benefiting those sectors. The second likely scenario is a Biden victory only in the House, but a Republican Senate. We see a 25% probability of this scenario. It would mean a smaller fiscal stimulus and a lower potential for tax hikes and potentially less regulation in the tech sector. Under both the first and the second scenario, we could see a normalization in foreign policy versus countries that have been particularly targeted by the Trump administration, like Mexico, and potentially to a lesser extent with regard to China. The least likely scenario, according to our model, is a Trump victory with a 15% probability. In this case, we would probably see a continuation of the previous Trump administration policies on corporate taxes, which will likely remain low, a push towards a loose monetary policy, so low interest rates, a slightly stronger dollar due to lower spending, and essentially a policy mix that would favor Wall Street over Main Street.
How are you positioned?
For many years, investors have thought that a Trump victory would be the best scenario for risk assets. We think differently. The Trump administration has engaged into a combination of tax cuts and pushed the Fed to keep interest rates low and to buy more assets, benefiting essentially the largest firms on Wall Street. This is something that has resulted into good performance for asset prices in financial markets, but at the same time has gradually neglected investment in the real economy. And as a result, the United States has grown, but in a very uneven manner, leaving some parts of the country and some parts of society behind. Eventually, this has started to undermine not only growth, but also the democratic process. What the Democrats propose is a reinvestment in the real economy. With a large-scale plan to boost infrastructure and green energy, healthcare and education, yes, you're going to have to tax the corporates near term, but perhaps the government will be able to rebalance productivity and inequality in the medium term. So we see this as a trade-off which poses, on the one hand, short-term profits and a boost to financial assets in the near term, but on the other, perhaps leaving Wall Street a little bit more volatile, but investing more in the real economy and in growth in the medium term. We think that in the blue wave scenario, more fiscal spending will push the dollar lower, will also push long-term US Treasury yields wider, and will push risk assets higher in the medium term, in particular risk assets that are linked to the real economy, for example, high-yield bonds or the Russell 2000, the smaller firms which are the ones generating the most growth. Finally, a Biden ticket would be better for non-US assets, for emerging markets, for Europe, and in particular for those countries which have been hit the hardest by the Trump administration, like Mexico, for example. That's all from Algebris. We'll be back with updates as results come out. Good luck and thank you for listening.
The Alpha Horizon. Thinking different, acting aware.